The government shut down. What are we to do? What are we to think about with regard to real estate? Well, I don't know. Let's find out. Let's look at some numbers and let's talk about what actually is taking place. I am Justin Miller with the John Miller Group. At the John Miller Group, we help people buy and sell homes. We help people build wealth through real estate. Okay, so this is the October 2025 real estate market update, where I provide valuable data insights for what's going on in the Las Vegas resale market for single family homes, condos, and townhomes. Because this is the October video, we're looking at data from September, so we know everything that happened in September. The data was collected on October 7th, and I'm recording the video on October 7th as well. Please, as you watch these videos, feel free to subscribe, click the notification bell and the like button, make comments. And by the way, we're one of the very few videos that you can watch that are not hyping crypto. So I think that calls for a thumbs up all by itself. Okay. So let's go ahead and dive in. And first, we're going to do a little bit of an overview. Now, last month's video, the September 2025 video, I did a very in-depth analysis looking at the macroeconomy, what's going on. I made some predictions about what's going to happen through the remainder of this year. So let's just revisit that, but briefly. I don't want this video to be nearly as long as last month's was. Okay, so I had told you last month, and actually I've been predicting it for the prior few months, it was very likely that we would actually find ourselves in a government shutdown come the beginning of October. It was frankly the way things have been going from the government this year. Very predictable. This is whether you like them or don't like them, I don't really care. But the reality is this political administration in Washington now is a group that loves chaos. They love destroying. They love harming. They love being vengeful. That's just the reality of the situation. If you don't like my saying that, you can stop the video now. So be it. You can unsubscribe to my channel. The truth is that we have a manipulative, vindictive administration that's doing everything it can to divide the country, to create political turmoil, and to create economic turmoil. And in doing so, unfortunately, they are having a very real impact in the economy, the macroeconomy, the regional economy, and an individual's economy, the way in which individuals feel about their ability to move into the future as well as survive the present. Okay, so that's creating fear and uncertainty. And frankly, having the government shut down contributes to higher levels of fear and uncertainty. It's a good thing we're not in Florida or Louisiana or some of the other states where federal flood insurance is really needed, because transaction volume in those locations has to have come to a screeching halt, because there are no lenders who write policy, who write loans if you cannot secure the federal flood insurance. Here in Nevada, there are a few places where flooding is certainly possible. If you're looking at a property, you want to make sure that you're looking at the flood zone map. I do that for all of my clients. Most areas in Las Vegas are very safe, so that's not a particular hang up here. But we do have a lot of federal employees. We have a lot of military employees here in the Las Vegas Valley. And those people right now are working either on about to be delayed paychecks or furloughs with no pay. And the administration is now saying government employees who are furloughed may never get the back pay that they've gotten in all prior government shutdowns that have existed. So more just uncertainty contributed into the environment. Now, having said that, we did have a glimmer of good news at the end of September, and that was the Federal Reserve cut the Fed funds rate by 1/4 point, or 25 basis points, same thing. Now, that's good in terms of a messaging point. The problem is, as I had noted, the Fed is starting to stare stagflation in the face. Fortunately, unemployment is still low and inflation is historically fairly low. So neither side of the dual mandate is yet a big problem. But inflation numbers are all working and moving in the wrong direction. And the unemployment level is moving in the wrong direction. And when both of those things happen at the same time, we don't have high unemployment, we don't have high inflation, we have stagflation. And that's a real challenge to the Fed, because the prescription for solving inflation, raising interest rates, the prescription for solving increasing unemployment, lowering interest rates, right? So these things work in the exact opposite direction, making the dual mandate very challenging for the Fed. Now, I had suggested last month what the Fed ought to be doing is not worrying about the Fed funds rate. That's a political statement in the current environment. It's not typically, but that's what it's become in the current environment. Lowering the Fed funds rate pushes upward pressure onto inflation and doesn't really do anything about the unemployment issue. What the Fed should be doing is they should be engaged in quantitative easing. If you want information about that, please go back and watch at least the first half of the September market update video, where I go in depth into what quantitative easing is and how it should actually be directed in the current economy. The Fed's not done that. Will they do it? I have no idea, but we'll see. So anyhow, what that means is we have very elevated levels of fear and uncertainty in the economy. We still have, for interest rates, fairly high. We got good movement on that in the last week of September. Well, actually, we didn't. We got good movement on that the week prior to the last week of September, when mortgage interest rates had come down 30-year fixed rate average across the country to 6.39%. The last week of September, they actually went back up to 6.46%. So basically, mortgage interest rates have been hanging out for the past few weeks around 6.5%. That is down substantially, 50 basis points, from where we had started the year. It's actually not very much different than where we were at this time last year, a little bit higher actually than where we were this time last year. So it's an improvement, slight, doesn't really mean much into the market. So because interest rates are so important to the housing market, right, they're not going to overcome fear, they're not going to overcome uncertainty, but they are significant because over 3/4 of houses are purchased with a mortgage, which means interest rates really impact the carry costs, the actual costs that people pay per month on housing. What's the Fed likely to do at its next meeting in October? It's kind of hard to say, right? Inflation is definitely trending higher. The unemployment numbers are extremely obscured because the current administration's decided they're not going to release any more unemployment numbers while the government shut down. That means the Fed is kind of operating blindly without having really high quality numbers about what's going on in the economy. So the Fed could choose to stand pat. Now, private numbers that come not from the government, are indicating further weakening in the employment environment. And so the Fed could be, let's say, aggressive in trying to get ahead of unemployment and lower the Fed funds rate by another 25 basis points later this month. I kind of don't think they're going to do it. I think kind of absent the official Bureau of Labor Statistics data on unemployment, the Fed's going to hold pat. The risks both up and down in the economy right now are fairly balanced. And the reality is, while unemployment is bad and maybe increasing some, it's still literally lower than what's considered to be the full employment level in the economy. So I think the Fed's going to be a bit conservative here, and they're probably going to stand pat on the Fed funds rate in October. Again, the Fed funds rate is a signaling rate. It's a policy rate. It does not specifically cause mortgage interest rates to change. So the impact of their decision is going to be pretty remote anyhow. Okay, so now let's go ahead and look at the actual numbers from the month of September. for what's going on here in the Las Vegas Valley. Now, these numbers are interesting, right? These numbers were put in place while discussions were taking place about interest rates coming down. And we actually saw interest rates come down a little bit. And so we definitely saw people jumping into the market, which is great. But since that time, we've had the government shut down and fear and uncertainty have not abated. So, and interest rates are not continuing to drop. Rather, they're slowly rising back to about where they were prior to the Fed's announcement in late September. Okay, so what happened in September for pricing in the Las Vegas Valley? Now, this is actually really interesting because we actually saw more people coming into the market to engage in transactions, and we'll get to that in the sold number. We actually saw buyers capturing a little bit of power. Now, I'm not going to say this is a buyer's market because that's totally not correct. But we've had a whole lot of press, which has caused some sellers to think, okay, now's the time, or I'm stuck with my home and I'm not going to be able to sell for quite a while. So in September, we had kind of this perfect storm of sellers feeling really beaten up on low transaction volumes and bad economic and political news in the press. And we saw buyers feeling a little more lively, if you will, by somewhat decreased interest rates, as well as the more inventory that's been sitting in the market. And so sellers, I don't want to say they capitulated, but they negotiated more strongly under the idea of, if I don't sell, if I don't take advantage of this opportunity right now, I mean, I'll have another opportunity for a while. And so we saw prices fall. We actually saw prices fall across the entire real estate market here in the Las Vegas Valley for resales. All submarkets fell. So what did that look like? In single family residential, median sold price during the month of September, $459,000. Now that's down $10,000 from where we ended August, right? So a $10,000 drop in the month of September. If we started putting a trend in place like this, I would become concerned, right? That's a substantial drop. It's actually a 2.3% drop. But I want to point out to you that while this is actually also down 2.3% year over year, because at this time last year, we were looking at prices of $470,000. So we're down basically $10,000. We're down $11,000 from where we were last year at this time, as well as from last month. If we look at the end of last year, we actually ended last year at 460. So we're across the course of the whole year of 2025, we're down $1,000. Right? So in other words, prices actually remain very flat across the term of basically 2 years here. We put in small growth last year in terms of pricing in single family. We put in basically small growth this year until the current month of September, at which time we're back down to where we ended 2024. Okay, so this is not the world is ending. This is not the sky is falling. This is a tiny bit of adjustment below flat. Statistically, it's actually meaningless. But I do the month over month comparison. I do the annual comparison. We're down 2.3% on both of those statistics, right? So prices did soften unquestionably in the single family residential portion of the real estate market here in the Las Vegas Valley in September. Again, I don't think this is a trend. We may see prices soften a little bit more in October. I will note to you that seasonally, prices tend to drift slightly lower through the end of the year before they start picking back up again in January or February, depending on the particular year. Right, that's the normal seasonal trend. So we tend to see the strongest pricing in June. We tend to see the weakest pricing in December. Okay, So we could see a little bit more deterioration, but it's a float down. This is not anything that's putting in place any kind of trend on pricing. It's not a negative signal for sellers in the market. It's not an encouraging signal to buyers in the market. Prices are what they are, and they're basically flat. Okay. All right. Well, what about that single family resale? What about condo resales? Okay, condo resales, a little bit more discouraging. Condo resale median sold price $226,000 at the end of September. That's down $4,000 or 1.7% month over month. But it's down 9.6% year over year. So when we get a 10% drop in any market segment, right? It's particular to the market segment. It's not across the whole of the real estate market. When we see a 10% drop, we could legitimately refer to that as being a correction, right? And we see that in the stock market as well. Stocks come down 10%, it's a correction. That's not a bad thing. It's actually considered to be pretty healthy in the market. We don't really often see corrections in the real estate market, or consolidations in the real estate market. But this is a long ways away from what might be considered to be a bear market, which would be down 20%. We're not near that. But there is unquestionably weakness in pricing in the condo market. Something to be aware of. Condo prices have been interesting and extremely volatile for the past, well, actually since we left the pandemic, right? And so it's something to think about if you're a buyer, if you're an investor, which particular submarket you want to be investing in. You've got greater volatility in condos, which means you might get more appreciation, you might get some depreciation. You are down now on median sold price in condos, and so maybe there's some upside here. But I think I'd be cautious with regard to the condo market. Now, if that's the particular part of the market that you want to play in, that's totally fine, or that you want to own a place in because that speaks to you more accurately in terms of your particular lifestyle. There's nothing wrong with that. And if you're buying to live in a place, prices will go up and down. So, that's just something that happens. It's a feature of the market. It's a feature of the condo market in Las Vegas, especially because it's a small market. And so simply changing the mix of condos that happen to be sold during a particular month will change the median price significantly. Okay, so that's condos. What about townhomes? Well, townhomes, the other submarket, which is multifamily, has held up differently than condos throughout the past year. And in fact, we've seen significant divergence between the townhome and condo submarkets since we came out of the pandemic. Okay, so townhomes, $335,000 at the end of September of 2025. That is flat from the 335 that we saw at the end of August of 2025, right? So that's held up really well, where pricing in the other two submarkets fell. We're also down 2.0% year over year. So year over year, a little bit stronger than single family, down 2.3%, considerably stronger than the condo market. It's kind of interesting because the townhome market is even smaller than the condo market. So we should be reasonably expecting to see greater levels of volatility in townhomes. But actually the townhome market has performed quite well over the past couple of years. And so that's an encouraging thing. If you want to be and you can afford to be in the townhome market instead of the condo market, there has developed greater levels of structural stability in the townhome market. So we'll see over the next 10 years how that plays out. A lot of developers are out there building townhomes now, and townhomes are a very small portion of the actual real estate market in Las Vegas. Now, pricing insight. Price per foot, I've not looked at this for the past couple of months, but I just will tell you, price per foot fell. It fell significantly, not a great deal, but significantly over the past month, suggesting that actually we're having a harder time at the upper ends of the resale market right now than we are at the lower ends of the resale market. So kind of an interesting point. We had seen strength, relatively speaking, in the upper portions of the market late last year, the beginning of this year, and that has gone away. We're now seeing relative strength in the lower end, the lower half of the market. Okay, so let's move on to sold units, right? So sold units is, if you will, a measure of demand. Okay, so unlike pricing, we actually saw good news on the demand side. Remember, demand, I measure that as sold units, because you don't get a sold unit unless you've got a buyer who likes a product, who goes into contract on it, and then closes on it, right? So this is our demand measure, is the number of units sold. Okay, sold, unlike pricing, which was down everywhere except in townhomes, which were flat, the demand measures all increased. Now, remember, this takes place against the backdrop of slightly lowering interest rates that took place in the second half of September until the very last week. It also takes place against the backdrop of some encouraging news that looked like, maybe some of the uncertainty would be lifted before we saw the government shut down at the very end of September. So it's hard to take these as forward-looking measures, but let's look at what actually happened with demand. Single-family residential. The number of sold units, 1,679. This is up. Now, it's not up a lot. It's up 47 units, or 2.9% month over month. It's up 9.6% year over year. Now, I'm going to comment on that year over year number in just a minute, but let me go on to the other submarkets first. Condos, 224, that's up. Not much. It's up by 9 units, up 4.2% month over month. Okay. It is actually down 12.8% year over year. It's the only submarket where we saw annual decrease in volume. Townhomes, 190, that's up 9 townhomes, or 5.0%. And by the way, just let me point out to you, statistically, condos went up by 9, townhomes went up by 9, but there's a big difference in the percentage increase. It's because the townhome market is smaller than the condo market, right? And so you see that higher percentage increase in townhomes. It's a statistical, not anomaly, it's a statistically valid issue, but it's just simply the way the calculations are done, right? And so your denominator is much smaller in the townhome space. Okay, and in townhomes, we're up 12.4% year over year. So interesting, right? Townhome prices stable, up 12.4% year over year for transactions, while being up 5% month over month. The other submarkets were up month over month, but prices came down. Okay, now, insight. In 2025, year to date, we're still running at volumes below 2023, which had been the slowest year in a generation, and below 2024, right? So transaction volumes remain really weak, right? It means that we are literally on track to have the lowest number of transactions in a whole generation. This is a very slowly transacting market. But I want to point out, right, so this is kind of interesting. In single family homes, I said that we were up 9.6% year over year. This is only the third month of 2025 where volume on single family resales exceeded the corresponding month from the year prior, right? It not only suggests something about, September was a good month, it also suggests, 2025 has kind of sucked for transaction volume, right? We're now in the 10th month, so that's the 9th month. So 6 months volume down from the year prior, 3 months volume up from the year prior, right? That's single family homes, right? We're seeing a similar trend across the other submarkets as well. I also want to point out some encouraging news here. Pending home sales in all 3 market submarkets were higher than they had been the prior month. And for condos and townhomes, both, pending home sales exceeded sales volume, closed sales volume. Right. So those are encouraging that we might see a bump higher in condo and townhome sales next month. Now, kind of interesting, while single family resale pendings were higher than the month prior, they actually came in a few units lower than the number of sold transactions, closed transactions for single family resale. So that suggests actually that we're going to have a very flat reading in October for single family resale. So not bad news, it's good, but especially since we're now going into the slower selling season, seasonally, it looks like we should have some stuff holding up fairly well in October, at least based on pending sales. Okay, so next item. I've not talked about this for the past several months for a variety of reasons, including the numbers are so small, they're stupid small. But I'll just point out to you, right, those, because it's still in the press. Oh, prices are collapsing, the economy is going to shit, and housing is, nobody can afford it, and everybody's losing their houses, and blah, blah, blah. Right, sure, fine. And so the story is foreclosures are through the roof, right? So this is the cumulative number for all closed foreclosure sales in Las Vegas, January 1st, 2025 through September 30th, 2025. Single family, 5. Condos, 1. Townhomes, none. So there have been 6 closed foreclosure sales in the Las Vegas Valley in the first 3 quarters of 2025. As I pointed out before, it's a fallacy to think that this is actually going to be a market that's generating a lot of foreclosures. It's not, for a whole variety of reasons. Don't think you're going to get a good foreclosure deal. You're not going to get a foreclosure deal at all. Okay? All right. So let's go on now to inventory, right? We looked at demand, which is sold units. Inventory is the number of sellers who are out there waving their arms. Hey, I got something to sell. I've got supply in this marketplace. All right, so inventory. Single family residential, 7,454. That's down 94 from the prior month. It's down 2.5%. It's up 17.4% year over year. Okay, now we'll talk about that year over year number in just a minute. But condos, 1,536. That's down 82 condos, or 5.1% from where we ended August. So month over month, it's up 11.4% year over year. Townhomes, 1,103 townhomes sitting in inventory at the end of September 2025. That's down 63, or 5.4% from where we ended August. So inventory fell month over month in all 3 market segments. And by the way, townhome inventory is up 56.9% year over year. But very important to note when you're looking at these annual numbers, these year over year changes, all segments showed decreasing levels of growth in inventory relative to the prior month for year over year. In other words, last month, single family homes, we were 27% above where we had been the prior year. Now we're up 17.4% above where we had been the prior year. We've actually seen this decrease, this trend of moving to smaller and smaller year over year gains in inventory for the past 6 months. This is a solid trend that's in place. Inventory is going down month over month, and inventory growth vis-a-vis last year is slowing substantially. Okay, so all the concerns about excessive inventory, they're not correct concerns. They've not been correct concerns for a long time. We never got to more than about 4.5 months worth of inventory sitting in the market in any of the submarkets, right? And we're trending down, and we have been trending down, and this is going to probably continue. And how do I know that? Well, new listings, which is new coming into the market inventory, new supply for resale units. Townhomes saw an increase in new listings, 12 relative to what we saw in September. Single family and condos both saw new listings come down, right? Remember, inventory came down, standing inventory, and now we also see new listings coming down. And that's actually been the case for the past couple of months too. So sellers are either pulling back, or they're falling into the seasonal pattern of it's late in the year and I don't want to be listed during the holidays, or they're thinking I can't get the prices I want. And so this is not pulling inventory out of the market. This is new inventory that's just not coming into the market. Okay, so that means that inventory is declining, and it will probably continue to decline. Frankly, probably continue to decline throughout the entire remainder of the year, just based on normal seasonal patterns. Now, we've not seen normal seasonal patterns with regard to inventory for quite some time, right? For several years. It's a thing that I've noted, and it's especially pronounced in the spring when we're not seeing these big inventory builds that we would normally be seeing, right? To feed the market, to feed all the transactions that occur in the spring and the summer. Well, that part of the normal seasonal pattern has not existed for several years. We could see a break in the normal seasonal pattern of declining inventory in the fall, but we've actually not seen a break in that inventory for the past several years. So it's reasonable to think that actually those seasonality issues that pull inventory down in the fourth quarter, we'll probably continue to see those this year. If we see a very substantial decrease in mortgage interest rates, it's not coming. But if we did, we would see inventory picking back up, and we'd see it picking back up quickly. We'd see transaction volume picking up quickly, and frankly, we'd see prices moving higher because the carry cost will become lower. So anyhow, we're not going to see big decreases in mortgage interest rates through the end of this year. Mortgage interest rates will continue to remain somewhere between 6 and 7%, probably pretty close to 6.5% through most of the rest of this year. Okay. Now, one other note, which I give you most months, and that is the back on market. Single family back on market, 625 failed contracts. Now remember, I call these failed contracts, but they're not. They're literally back on market, which means a failed contract that got relisted into inventory. Okay, so a failed contract that never relists or does not immediately relist within 30 days, that's not a back on market. That's just a failed contract. And we don't have a good measure of that. So I use the back on market numbers to tell us how many contracts have collapsed, have failed, even though I know it's an undercount. Well, even though it's an undercount, 625 single family resale contracts collapsed back on market. That is 27.1% of all of the single family resale contracts that have been written in the month of September. Horrible. Condos, 94 failed, 29.6% of all contracts written collapsed. Again, these are undercounts because they're not actually failed, they're back on market. Townhomes, 72 failed contracts, 27.5%. Right? Horrible. This has been running since 2020 for 5 years now. This literally for 5 years now. This has been running between 25 and 33% failed contracts every month. An absolutely deplorable situation, but that's what it is. Make sure you're talking to a real estate agent to find out what's going on. If you don't already know, if you haven't listened to me, find out what's going on. And by the way, please reach out, talk to me. I'd be happy to help you with your own transactions. I'd be happy to help your friends, your neighbors, your family, your colleagues, whomever with their transactions, please refer them to me. Please share these videos with them. They're helpful, important resources that will allow people to engage in higher quality transactions in the real estate market. Okay, so that's it for the October 2025 real estate market update, where we've looked at the September data for resales in the Las Vegas Valley. I am Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people build wealth through real estate. We help people buy and sell.